Hello, good morning, and welcome to today's morning report. Charles Appraisals with me, Richard Perry, market analyst at Hantech Markets on Friday, the 12th of May. The markets have come up with a fairly sort of neutral open, nothing too significant in terms of direction, a bit of consolidation that we're seeing, but there is a very slight sort of air of a safe haven move. You've got gold and silver gold specifically that is starting to find support, but also you're seeing the treasury yields that are coming off the top. Now, Treasury yields coming off the top is sort of starting to just play a little bit into this safe haven sort of flow that we're getting. You're also seeing a bit of yen strengthening against the dollar, and not only that, you're seeing these sort of the VIX volatility starting to pick up. So basically, we're starting to see more of a sign of possibility of a little bit of a correction on these equity markets. Although you see Wall Street was lower intraday yesterday, but bounced into the close and subsequently only closed marginally down. But still, there was a sort of a threat of a corrective move going on there. The dollar itself at the moment is fairly flat, nothing too much doing there. The oil price stability has probably helped to hold up the markets, or the positive sentiment in recent days, as the sort of rebound, or sharp rebound I should say, on oil has sort of taken hold. But generally speaking, these sort of treasury yields coming off the top could be a little bit of an indication that the markets could be about to have a little bit of a corrective move. So in terms of your economic data today, I think we're going to be looking out for all this US data that we've got. You've got sort of inflation and retail sales, which are on the agenda, and they are two major bits of US data, tier one data points. Before that, we've had the German GDP, which is bang in line with estimates, 1.7% for the annualized or year-on-year GDP. Spanish inflation, basically in line. Nothing. Actually, no, sorry. Basically, just picking up slightly on that HICP number, which is interesting, and also the CPI. But what we are looking for is this US inflation this afternoon at 1:30. Now, CPI is expected to dip slightly to 2.3%, and the core number at 2%. Now, show you the CPI headline. 2.4. That's down from 2.7 that we saw a couple of months ago. So are we starting to see this sort of inflation just losing its way a little bit to the downside? You've got the core data that is 2% again, just rolling over a little bit, isn't it? Core inflation. But the retail sales also at 1:30 now. That's expected to come in at 0.5%. So again, another month, 6 months in a row, that would be of month-on-month gains. And the year-on-year data is sort of fairly strong, above 5%. But if you started to see the retail sales coming in under estimates, and inflation maybe questioning that sort of reflation move that we've had since Trump, could be a few questions asked about the dollar and the strength. But generally speaking, the expectations of a June rate hike are still fairly strong, very strong, sort of about 80 odd 90% on the Fed funds futures. So the markets are still fairly sort of solidly going for June, but these inflation numbers today could have a bit of an impact. Now, my chart today is silver. Now, we've had silver, which has been in this sharp decline, big, strong decline since the middle of April. So many consecutive bear candles in a row, and also I think there was a sequence of 10 lower daily highs in a row before you started to see the turnaround this week. Middle of this week, we saw Wednesday the market pulling up above the previous day's high, and then yesterday we saw a positive candle for the first time since late April, and again we seem to be sort of following that up today. Now, what we have seen is a mild sort of improvement in these momentum indicators, nothing yet confirmed as a recovery, but the RSI is still not far off 30 now. Stochastics is beginning to tick higher, but that downtrend is intact, and the trend is your friend until it ends. So that downtrend is intact still. So we need to see a breaking of that downtrend. That downtrend currently today around about that 1650, 1655 area. And it looks like what we could see is a bit of a recovery into this sort of old sort of resistance band really, this old pivot around sort of 1680 towards 1690, which is also that 23.6% fib level. So we could see a bit of a rally on silver. And it's beginning to take shape actually, because you can see on the hourly chart above 1640, not decisively above it, but we're starting to see a move above 1640, which is a bit of a pivot, isn't it? A couple of old lows and then turned into resistance, but I think a move above this reaction high here at 1652 is needed really. I think that is arguably the sort of confirmation of a turnaround, and you'd start to then see a bit of a recovery, possibly even being able to measure a recovery target of $16 up to 1650. What does that give you? 17 figure, which again is sort of just above this sort of pivot area, or this overhead supply of 1680 to 1690. So it is perfectly possible that we could see this recovery taking shape, but you need to certainly see that broken downtrend, and obviously that downtrend comes in around 1650, which again is around about where that reaction high was on last Friday. So we are seeing a bit of a turnaround on silver potentially, so watch out this how this one goes. So I wish you good luck in your trading today, and I will speak to you later. Thank you.